to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a second more of your time. Let's go into the charts, shall we? Bada bing, bada boom. One day later, 12 hours candles from where we were, and I thought this was funny. I'm gonna go to the last projection I had up before I bid you adieu yesterday. Let's just go to what I was saying would happen from the point we were at. I said we would likely come up and go up to here and then maybe retrace, and then we did see that shooting up from there with the retrace down to the region we were talking about. So this was about where we went offline here, and then we saw that path up, and we were coming back down into that region we were talking about that we saw in the momentum. So let's go back to the pitch fan levels we were talking about here. So we're gonna miss the New York Open for NASDAQ, but I think we had a good day yesterday, so it's probably best that we just keep it chill today anyway. So we're gonna go in casually later. Let's see if this will load. There we go. So on the bounce off the one of the bearish trend-based fib level, we saw a bounce up to the 786 region of this bearish trend-based fib extension level. We attempted to reclaim it as some sort of support, and that has failed, and we are currently coming down to the diagonal pitch fan level of the 0.5, which is the equilibrium path of the upside mean reversion area of this upwards mean reversion pitch fan thing that we've had back here since January of this year. And it's been maintaining these levels quite nicely, which is why we have them in this manner. So we're going to go look at the liquidity now and see where we stand on in terms of that. What is the high block capital? Well, here is where people lock their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss, and then that market maker reclaims their liquidity and burns their carcass to a crisp. So let's just see who got burnt to a crisp today. So this is the 1 minute time frame, and from the last time we met, there was some shorts that came back into here. They came back and ate this 120 million in short liquidity and 120 million here, and came up to this 100x pool of 107 million up here at 27.33, and those shorts got smoked.
Fatality.
And after that, they retraced down into these 100x longs, which opened up. This pool of 100x longs, 125 million, got chewed up. And some more opened up as it surged up here, and they came back into those as well. So they've just been eating the 100x longs for now. The stacked up amount currently down at 2687 could be on the table here, or the stacked amount at 2761. Now a lot got lost to Father Time, so there is a very uneven viewpoint here at this time. It's hard to make heads or tails over which side they would go to, even though it does say you have more long liquidity. That's based on the minutes look back here, which we have previously seen lost a lot of short liquidity, but we didn't take it just yet. So let's go to the higher time frame and expand our vision to the heat map above. And by the way, please consider subscribing or hitting that like button at the very least, because this heat map is not free and is provided to you free. So you might as well say what's up for that if I don't think it's too much to ask. All right, so let's wait for this to load. Let's see how it's going. What's up, Wendy? How you doing? Low Mips, what's up? CNC Island, Rayman, APV, what's going on in your hood, in your neck of the woods? All right, so we skipped the 12-hour time frame, and we're going to go right into the 7-day here. Let's see how we stand on there. So it looks like some longs have re-entered here, and you see a little bit of liquidity down here at 26.4, and a little bit below you got about 10 to 15 billion dollars up there, or down there rather, and you got some more that it's attempting to get back into up at 27.8 as well. The imbalance was previously to the upside, but it looks like you're starting to get an even Steven field here on the 7-day time frame. So which one do you make out to go and attack? We have to expand further to see if that can be seen. Thank you. Let's see. All right, the 1 month time frame. Well, we previously came back into this liquidity about $30 billion on this time frame. It was a lot more on the higher time frame, which is why we came a little bit lower. And then we're starting to see this retrace back up into these regions because of the imbalance here on this 1 month time frame being to the upside. However, if we juxtapose this to the 3 month time frame, you will see this $150 billion down here at 25.6. You have 55 billion here, 25.4 you have 60 billion, and at 25.2 you have 51 billion dollars. So that's $150 billion dollars in this region that we have yet to come back down to and spawn divergence off of on this 3-month time frame. Starts to get a little bit sparser at 32 billion at 25 even. So I would suspect if we do come down into this region, there should be some sharp divergence that is spawned off of the carcasses of this 25.2 region, which is why we've been having this bearish trend-based fib extension level out to you since end of April really. And we had it out there before it even occurred. And we were talking about this level knocking out the remainder of these longs. We've currently gone into this much of the 1 to 1382 region, but we have yet to come down into this region to clear it out completely. So are we going to see that occur? Today is Thursday, midweek reversal. Are we going to create that double bottom effect that we were talking about on Monday, where you come back and into this before we come out? I don't necessarily believe that this was the bottom, although you did see a daily buyback wick, which we went over as well on Monday, showing you that objectively bullish idea here of the buyback wick. Now, what do I mean by that? Well, you take a fib retracement tool and move it from wick to wick in the direction of the momentum that occurred, which was to the upside here on this candle, wick to wick, and then you put it to your basic, if it will let me right click. All right. And if the body of the candle falls within the 382 level, which it does, this is objectively bullish. And so that is one way to measure candles using a candlestick theory. So this was a bullish buyback above that 0.5 level, which could imply that we do see upside from here. However, they like to recover wicks, so this would make sense that they come back into eat this wick and then make sure they trade fairly before going to the upside. Did they do that here? Well, they did it much later, but they did come back to that wick. So will they come back up to come back down is the question. So if we go to this 3-month time frame, the implication to go to the downside is there, as we see the liquidity imbalance being located below. I did disregard what heat was above, but we'll start to get into that now as we start to see this narrative path to 30K and beyond being formed by these double digits liquidity players up here. Most notably at 32.7 you have 70 billion, 33,000 you have 55 billion, 57 billion at 33.3, and 33.6 you have 65 billion. So this is a very thick narrative that's starting to develop to the upside. However, you do see this imbalance on the 6-month time frame to the downside. Most notably at 22.5 you have $103 billion down here. Now if we started to eat into this, the bearish tone and sentiment would be set and people would be looking to short even further down. Now they did this before and they retraced down to a 618 level on this expansion to the upside and then bounced off that on the Silicon Valley Bank collapse. So are they going to spawn some divergence at some point and bounce out before reclaiming 22.5? That is one possibility. As we expand to the yearly, you will start to see that narrative structure come into focus ever so slightly. So you'll see that narrative structure come into focus here as you start to see the sides on both ends look in even aquamarine, and you're seeing $126 billion at 32.4, 100 billion at 32.8, and 110 billion at 33.2. So there's 300 billion and beyond up here, creating that narrative structure to the upside, and you're seeing that same 100 billion, and so down here at 25.2, 24.8, 24.4. And yeah, if you start clearing some of these pools of 100 billion, then it starts to create that imbalance to the other direction. So have we already started to eat into that and make that be known? of that imbalance to the upside. Now there's a big gap here of sparse liquidity to take out. Still double digits, but not nearly in the same realm as 83 billion down here at 25.2. All right, so coming back to one of these regions, like you got 100 billion at 24.8, 82 billion 24.4, starts to get sparse at 24 even. And yeah, there's that thickness down below. However, the narrative structure looks very even Steven to me on this yearly time frame, because you go back a year for all these pools on the external liquidity range. So it's really anyone's game at this point. It's a very tough thing to say. It's not as easy as it was when I saw the 180 billion that it came back for in March. But yeah, this is 150 billion down here that's screaming take me so far. And if we just look at the price as we stand right here and just look what's above and what's below on the immediate, you have 17 billion at 27.8 and 12 billion at 28 even. So coming back into this region to take out the 30 billion in shorts before going lower, if that is the case, is more nearby than the downside 26.4 region of 16 billion and 7 billion at 26.2. So if I just look at this 3-month time frame and then look at what's nearest a buy here, it would make more sense to come up to 28k before anything else. And yeah, let's go into the regular Binance chart and see our fibs and throw on our momentum oscillators. Starting to get it. So real quick, why am I doing this whole NASDAQ futures thing and everything? Well, Bitcoin, if you haven't noticed, takes a long time to make a move these days, and it's kind of been 1 week of just being in this small little range. And while you could be scalping it, the liquidity is quite sparse, if you will. And if I go to NASDAQ futures here, if you look at the daily time frame, it's making these massive moves from hundreds of dollars each time, and one 5-minute candle of the NASDAQ contains more volume than an entire day of BTC. So the axiom that stock market is boring or not as volatile as crypto is completely insane, because you have moves like this that go from 13,480 all the way up to 13,700 almost in a matter of like an hour. And you got volatile Darth Maul candles and all this other stuff in here. So there's a lot to be said in these trading days, if you will. So yeah, there's something special about this. And when you throw on Momentum Master, which is our indicator here, and you start seeing different momentum waves and crossover events, you can take these for massive moves and massive profit. And so that's what we're attempting to do going forward here, because the money isn't necessarily all in crypto. Once again, one 5-minute candle of NASDAQ contains more volume than an entire day of Bitcoin. So if you're looking to try to get funded like a lot of the growing Momentum Master traders in the Momentum Master Discord, the indicators do work for that as well. And you see these nukes playing out. You see these overbought time frames and the crossover events doing their thing on these time frames and below. We're taking it to a very quantum level down on the 30-second and below, but that's for another discussion within the Discord. If you are interested, links are in the description for more. Go to momentummaster.info for the indicator that we're about to go over, but we're not going over NASDAQ here. We have limited time, and I would rather spend that time in the Discord than on YouTube. So we're going to go to the Binance chart and then go to the 12-hour time frame and start from the higher time frame. We already showed that our idea to come up and retrace has occurred, so we are right on target for the projection 24 hours ago, so we can delete that for being accurate and delete it again. Delete this cloud curve that we are seeing, which caused us to draw that projection. And we're going to see that curve starting to appear here on the 12 hour as well. So this 12 hour notably starting to curve here. So are we going to see some Pierce Brosnan 007 action to the upside here? We did have these pools that we were looking at in the fair value gap up here, which we have yet to reclaim. So are we going to see that? We have the baselines intact still on the 12-hour time frame after an attempt to break down beneath them. Let's go start at the daily. The daily time frame, we said watch for this crossover event. We did have the crossover event. So this closed bullish and gave us the crossover event. The last time we had a cross down event, we did see downside occur. When we had cross up event into resistance, we did not see that occur because we were at higher time frame resistance. But if you go back to the past down below and you had cross over events like this with the price above the baselines here. What do I mean by baselines? Well, if you go to momentummaster.info, scroll down to features and look at baselines, you can read about them. They're your first sign of reversal. So if the baselines close beneath the price and start to cross over, you start to see this leading indication of things starting to make a turn. And on the higher time frame, they do give that insinuation for more upside in this angle of scooping, like an ice cream scoop at like 35 degrees like this in this nice curved manner, starts to insinuate that there might be more upside in store despite the liquidity that we're talking about coming down to here for. And there's nothing to say we don't wick down into it and get bought back up off the divergence it spawns. And so if we go to the daily time frame, Momentum Master B oscillator, you're getting a rising sun event with that crossover event. That's a very good symbol for a long. You're getting a potential MACD cross up event on the leading MACD indicator here on Momentum Master B. Now if we go to the 22-hour time frame, start to make our descent through the time frames, we're starting to see that we're getting double topped overbought on the stochastic RSI. The money flow is coming up slightly above the RSI, suggesting a little bit of fatigue or come down here some more to meet the RSI. Although it could go up a little bit more before it does that. You're starting to see this open up in terms of momentum on the Williams, and it could continue higher. And then we collapse down into the 12-hour. We also saw the crossover event on that a few days ago, and same with the 12-hour time frame, which is still maintaining and getting that double top event, and the Williams starting to open up here. Okay, so far so good. Crossover events intact on the daily, the 22, the 12, the 6. So you're seeing these crossover events that are still holding the price in such a manner where the price is closing beneath the base, above the baselines rather. You're losing the slim boy here, but the good news is you are reclaiming that cloud. We put out that idea of the curved cloud that was starting to occur, and this curved cloud is occurring, and just similar to what we were seeing on the higher time frame with the curved cloud doing this. So as the curved cloud comes around, you'll start to see this thinning nature around a certain time. Is that going to be Friday tomorrow or Saturday, where it starts to thin and do something like this? And in this case, where it was thinning and curving to the downside, you saw this thinning action, came back and it kissed it, bearishly retest, continued to the downside. So are we going to see this thinning kind of come back, kiss it, and continuation to the upside idea? If it's doing the opposite, that's what it would look like, something similar to this, where you pierce through and you kind of kiss it as it's shifting, and then it starts to send you back up. Here we did a lot of meandering around on this time frame, as we did for 41 days, I believe. Once again, this is 41 days of long, so that was a long consolidation pattern before we ultimately burst above the cloud, kissed it as it was thinning here at this point. And this would have been your 6-hour candle here, where your 6 hours closed above the cloud. It started to shift, and then you got that preemptive idea before it surged up like this. So you could have gotten that idea of reclaiming the cloud before the Clan MacLeod said, "I am the only one." Sorry, that's a Highlander joke. So anyway, If we come back and do something similar, get rejected off this cloud, come back, it's thin, and then we get the go ahead symbol, you could continue higher on this. There is a possibility there on the momentum oscillators with this cloud idea and the outskirts of the Keltner also curving on the higher time frame. Okay, so first things first, you got to reclaim these things. We can put out a bullish projection now that we have a rise retrace idea. So we can do this fib extension level where we take the bottom to the top to the retraced idea down below. And so one idea you need to see maintain is this 236 level of 27K even, 2704, which also coincides nicely with our idea of this cloud kiss. And so if you were looking for a bullish fib extension level to take us to the upside, this would be the narrative structure to do so, and it would take you up to this region at 29K, 2901, and the ideal version of that. Okay, so this bullish trend-based fib extension level, if we maintain this 236, could take you to the upside upwards of 29,102, or a Hail Mary up at 29.5 or 30K could be on the table if we maintain this 236. It all starts with the 236, and if it breaks down there, you know where we're going, down to this region as well. So it's about charting your path. The art of the chart artist is the cartographer who's plotting your course through the course of price action. So you're trying to find out what levels, if and when, you will take to where and why. And so that's what we're trying to do and establish using liquidity and momentum. So if we look at the momentum here, the momentum waves appear to be fatiguing out, and we have 4 hours for this to open up. So that could mean nothing. We could surge up to here. The MACD, leading MACD, is crossed up still, so we still have this potential to continue. Williams looking ambiguous, but could continue higher as the crossing rising sun event continues on its way. And that's the 6 hour, attempting to double top like the 12 and 22 are currently. 4 hour getting overbought and overextended on the stochastic RSI. The stochastic RSI is not the most accurate of indicators. As you see here, you get overbought and continue higher with double top scenarios ensuing, which is why you need money flow and Williams and all these other things in confluence with your idea, with the baselines and whatnot. So are we seeing this baseline idea maintain? Now, we had a cross down event met with a cross up event, and so we're met with these steep cross down and cross up on the 4 hour here as we meander around here. We did see this come back to kiss the cloud. It failed beneath the cloud, but the cloud started to thin here, so you could have looked for an idea for a long based off that thinning, even though it was down below, and that could have taken you to the upside. And I think this is why we put out that image yesterday, if I recall, because we started looking at this curvature, the curvature of the cloud and the thinning aspect of it. And we were saying you would have to get above the hourly here and then come back and kiss the hourly, which is what we're doing. So we saw this piercing above the cloud, you thinned the cloud, you reclaimed it, and so we're coming back to test that theory of maintaining the bullish narrative. And so that 236 level is going to be pivotal with this super trend and cloud, whether we continue to the upside or not. You're seeing the downside cross down event for the hourly time frame play out here, and the 4 and the 6 are overbought at this time on the stochastic. Your RSI still has room to go, so you don't necessarily have to put all of your faith into the stochastic RSI, which is why we put all of our other indicators there alongside it. We are oscillating within the Keltner channels, which is a ATR-based Bollinger Band idea. So we're at the bottom of the channel on the 15-minute time frame, and we're seeing a 15-minute potential bounce to the upside here for at least a cool percent to see if we can recover this BPR fair value gap on the 15-minute time frame. What do I mean by BPR? Well, it's a balanced price range fair value gap. That's when both candles trade straight through like that without giving any other price action. So this entire region here is a fair value gap by nature called the BPR, the balanced price range. So you could come back up to this BPR super trend, and even if you don't know anything about that and you're just interested in Momentum Master, it will automatically chart these dynamic support and resistance tools that you can use if you're starting to fatigue outside the Keltner channel. Maybe an idea to take profits is in store, and sure enough you come back down. And so you could just go off these ideas of going beneath and above the Keltner channels on these different time frames for where you should consider positions, entry and exit. So you could be seeing that entry of a scalp on the 15-minute here to the upside for a short scalp play up here, and seeing the range. How many times have we hit the range here? Well, it looks like we hit here once. Here's the third time if you want to count, or second time rather, if you want to count that. But this entire range, this was the third time, which is why you started to come down out of there. So it's the power of threes. You see those three hits to the high, and if you want to be more precise about it, you could just do a line here and do that where it meets, which is here. So you have those three hits to the high with the reversal. Okay, so if you look to this BPR, we have yet to have reclaimed that as well. So you start to build the narrative of a balanced price range fair value gap here, balanced price range fair value gap there, another fair value gap up here. You're starting to see these fair value gaps that were lost to Father Time that we had previously outlined. And we put a lot of 100x pools up here too. I don't know what happened to my arrow here, but there was an arrow up here too. So there was some liquidity in the charts that was pretty high. I think it was in the $280 million, and it was really stacked. So this coincides with the bullish trend-based fib extension level. If we were to go to the upside here, all of these fair value gaps can be reclaimed on these time frames. Okay, so even if we were to come down to this region, in order to justify that sell-off and the fury that it would ensue to come down to gobble this up, they would have to stop out a lot of 50x and 100x pools that are still open, and that's what coming up to come down means. You stop, hunt, rise before you drop, and then that's why we put out this idea of coming up to here before we drop down as well. Okay. So you go down to go up, and you go up to go down. And so right now we are attempting to look at the idea of going up here and how far you would go up and where these fatigue points would be. So this 65706 region on the bearish trend-based fib happens to layer itself quite nicely with the bullish trend-based fib extension level. So you're going to see some sort of resistance if you get above this point anyway. So that would be where you would start to think about where fatigue points might occur, but it would have to coincide with some sort of level of a fair value gap or liquidity pool, which could be at 28K even. Okay, we don't have that data anymore. It was 6 days of time lost in the ether here. So seeing where the imbalances are opening up currently is the only thing we can look at, and the juxtaposition of those higher time frame external liquidity pools. Hopefully that all made sense to all of you out there. There can only be there can be only one. Yeah, you got that reference. All right. So yeah, there's some sparse liquidity bubbles opening up here. Nothing really noteworthy on this level where it's like 185 or 200 billion or more. It's the maximum you're seeing here is 125 million here and there. So there's sparse liquidity being entered in the charts. There's a visible disinterest being shown right now for the last few days. Not very much liquidity entering here. So we need to see some sort of movement to induce some liquidity to enter the charts. We'll keep you posted on that idea. But as it shows, they're trying to appear weak with this double top M pattern idea. You have 1-2 hits to the high. Are you going to break through this range, or just are we looking at a range trade region for a few more days or weeks? I don't know. Okay, so the hourly, 15 and 5 minute could be in play for that bounce off of the cloud at the 236. So looking at the 236 to hold as some sort of divergence play at 27K. Let's see what's down at 27K. You have a bubble here of 50X at 125 million at 26.87. So if you were to come down and knock out some of this liquidity down here and spawn some divergence to the upside, you could see that scalp to come hit these guys up at 27.78, and the other pools we lost to Father Time. So the one thing to note is the hourly Williams is high, and you're seeing the cross down event on the MACD, so you could see this suppression of the hourly here down to these regions, which is why I'm not sold on the long until we come into some of these levels down below at the cloud idea. So it's basically a continuation of what we were talking about yesterday, coming down into this region. Now the once again, the pattern for the week is midweek reversal Thursday. So you have Tuesday, Wednesday setting you up for the week, which did not really do much. So yesterday we basically went down and came back up in the midweek reversal Thursday pre-market. We came back up, and we've been range trading within this region. This could be a SR flip of this Wednesday region. So is the midweek reversal to the upside? That could be the case here. For Tuesday and Wednesday, we basically went sideways and dropped it slightly on New York session with the London handoff on Wednesday, which took us to the upside. So Thursday has been just basically nothing has been noteworthy of a midweek reversal, and tomorrow is Run for Profit Friday. So where are we going to run for profit to? Are we going to run to profit on both sides? Are we going to go up to go down? Are we going to go down to go up? That is the ambiguous nature that is occurring right now. I'm just slightly bored by the price action of Bitcoin at the moment. It's not very active compared to what NASDAQ has been doing. If you just look at, once again, what has been actively going on here, like we just missed this open of this massive candle to the upside, and we're seeing this massive movement here. You see how quick it's moving, and so this is why it's interesting to consider diversification outside of crypto if you are not already considering it, because crypto is not all there is. And yeah, so that's something to think about if you are on the fence about that idea. It's very much the same. So we're starting to see this possible ABC to the downside here to the 27K region, and see if we can find some support off of some of these recoveries of these candles here, and then see what can happen at that time. All right, well, that's my story, folks. I'm sticking to it. So we see these recovery ideas coming to the downside. If we hold the 236 at the 27K for the bullish narrative, then you could come back up into these regions at 28K and beyond. If not, you're coming down to these 25-2 regions to recover that 150 billion down below. All right. Well, that is all she wrote, folks. So once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same and not waste 1 second more of your time than we have to. Hopefully you got some insight off the liquidity and the momentum and all that fun stuff, and we'll do the same. We'll bring you the accuracy, the precision, and all that fun stuff and so on. So we'll catch you on the flip side, ladies and gents. Peace.